All right, what's up, guys? Feels like long time no see for sure, right? It's a beautiful Saturday, or my God, see, I'm so tired that I don't even know what day it is. It's a beautiful Friday evening here in New York, and we're looking at one of my favorite buildings, the Sherry Netherlands. Hope everybody's doing well. It was a pretty eventful day in the market. Jackson Hole week. We heard from Fed Chair Jerome Powell, and it seems as if the Federal Reserve is going to be taking a little bit more of a dovish stance. We also have some historic and breaking news pretty much right off the press right now, guys. The United States government is taking a 10% stake in Intel. This is huge. This is big stuff. We'll talk about it today. I'll probably be on for an hour. I just wanted to jump on, say hello to everybody, and take a nice stroll on this beautiful Friday evening as I finally managed to escape the office early. So let's see who we got in the chat. Hey, I see Land of the Mitten. What's going on? Lena Sandoval is here. Teresa Diaz, TD. What's going on? Jen Claus. Sally is here. Allie French. Jennifer Gala. Hopefully you're doing well. Hey, what's up, Mike? Mike Boy, what's going on? Jack Jackson. Vincent is here. Top Cat. Always a pleasure. I see Austin. Skip Turner is here. Trust you've been doing well. Nancy, what's going on? Happy Friday. I was pretty busy today, but I managed to be able to go outside right around right around like 2:30 p.m. And I was able to film the part 2 of our Sutton Place walking tour series. One of my favorite architects of all time in New York, Rosario Candela, has a beautiful building at 1 Sutton Place South. Now, I'll probably upload that tour maybe on Saturday. I think it's Saturday or maybe Sunday. But the reason why I like Rosario Candela so much is because he was very prominent during the Roaring 20s. And I think a lot of his architectural flair, particularly, not necessarily on the exterior of the buildings, but the interior design, really has that Roaring 20s style flair. So we'll check that out tomorrow. I see Frank. What's going on, Frank? Thanks for joining us. I see Joe C. says long time no see. Yeah, it's been a while. I've been on a few big projects that maybe I'll tell you guys about soon. Shane 71 is here. Hal T16. Steph UF. Hope everybody's well. OG Goat says, hey Tom, really missed the live streams. I've honestly missed them as well. Not gonna lie. But duty calls, as they say. Duty calls. Brian says, how are the markets? Markets are pretty good. This is a very, very strong bull market that we're in. Obviously, we'll get into it today, but there was a really good article in Barron's over the weekend talking about the history of the Federal Reserve, right? Going all the way back to Paul Volcker. For some context, for those of you who don't know the relevance to the conversation as it relates to Paul Volcker, he was the Fed chair that really had to come in there, I believe, when Jimmy Carter was president, and jack interest rates 20% to kill off extremely, extremely high inflation. Now, I would say the debate as it relates to monetary policy in 2025 is that President Trump and the Trump administration has been really hammering Fed Chair Jerome Powell to lower interest rates, right? But the problem is Fed Chair Jerome Powell claims that it's too soon to start to lower interest rates because there could potentially be a second wave of inflation due to all the geopolitical risk, the war in Ukraine, also with all the tariffs and such. I'm not saying that's my opinion. I'm saying that's kind of what Fed Chair Jerome Powell has been messaging to the market. But Trump has been, I mean, my God, lambasting this guy to lower interest rates. Here's the problem. The Federal Reserve, it's so critical, right? Whether you agree with the Trump administration or not, it's so critical that the Federal Reserve, central bank, remains completely separate from a political entity, right? Because the theory there is that if the Fed chair takes into consideration politics, well, they're not necessarily going to put their best foot forward in what's right for the economy, but they'll do what's right in terms of the administration. For additional context, and it's been a while since we've been doing these live streams, but I've always said that the President of the United States, generally speaking, gets way too much credit when the economy and when the stock market is performing well, gets way too much credit, but they also get way too much credit and take way too much blame when the market is not performing well, right? When you have a very serious bear market, because the driver, right, the main driver of the economy, in my opinion, and the main driver of equities or stocks is really monetary policy. If you are the President of the United States during a time where you have very lackadaisical and accommodative monetary policy, well, chances are the economy is going to be doing pretty well, right? Chances are unemployment is going to be at all-time record lows, and equity valuations, stocks, and even real estate is going to be at all-time record highs. So, of course, every single president wants to have very relaxed monetary policy. Nobody wants to be President of the United States when you have an extreme tightening cycle, right? For additional context, if you remember when the COVID pandemic happened, that caused a major recession in the United States. And in response to that recession, the Federal Reserve was forced to, well, print a ton of money and be very, very accommodative as it relates to their monetary policy. And government, on the fiscal side of the house, also spent a ton of money. So you had this massive rip-roaring bull market all the way up into the peak of 2021. Now, what happened in 2021? Let me try to zoom back in here. Oftentimes when it's, how should I say this? When it's light out, you could do the wide angle camera lens and it'll look good, it won't look that grainy. In any event, in 2021, due to the massive amounts of money printing while the economy was essentially shut off, we had inflation go on a tear, right? And in order to tame that inflation, well, what did the Federal Reserve had to do? They had to raise interest rates, right? The Federal Reserve raised interest rates in such a short period of time by about 500 basis points, and stock valuations just cratered, particularly the high beta growth stocks, right? If you look at, Kathy Wood's funds, the ARK ETFs, those got absolutely hammered. They were down like 90+%. And they took almost 4 years now, just to even try to recover. So I think in all, my kind of opinion on this whole President Trump versus Fed Chair Jerome Powell thing is I understand where the president is coming from, right? Just because in his vested interest, he wants the Federal Reserve and Fed Chair Jerome Powell to lower interest rates, be super accommodative, so they could jack the prices of stocks and make, a liquidity boom, right? If interest rates come down, well, you're going to have real estate transactions pick up, you're going to have M&A transactions pick up, you're going to have IPO market pick up. So I get it, but I think it's more important to kind of keep the quote-unquote facade going that the Federal Reserve acts completely separate from the federal government. I think that's like a sacrosanct thing. Anyway, that's kind of my take on it. I'll stop yapping and I'll check in on you guys here. I see my friend DC322 is here. Hope you're having a good Friday. I see Scott Solomon says, hey Tom, have a safe walk on the busy streets in New York. Thank you, Scott. We're now looking at one of my favorite buildings here. This is 50 Central Park South. This is the Ritz-Carlton Hotel and Tower. They have residences there. Amy T is joining us. Cheers. Connie Ruiz, welcome. I know, Holdo Baggins says I miss ZERP. For those of you kind of unfamiliar with that acronym, ZIRP, it stands for Zero Interest Rate Policy. But you know, after today, it does seem like, you know, the Fed is pivoting a little bit, and it's going to be very, very accommodative. We'll see. Skip Turner, good to see you. Now, another big thing is pretty much you had a pan bid in the market. Cryptocurrencies went to Mars. I think we got a new all-time record high for Ethereum. Ethereum today was up, what, over 10%? Something like that. I think Bitcoin's back over 116,000. We'll see if we get some follow-through on, what do you call it, on Monday. But it was pretty significant stuff. This is looking back over towards the west side. I'll try to zoom in here. This is 1 Central Park West. That's the Trump International Hotel and Tower. And then you have the Deutsche Bank centers right there. This is my old building right here, 106 Central Park South. This was an amazing building, an amazing experience living in here. This is a condo building. Many people think that this building is a co-op. It's not, it's a condo. Hey, Matthews says, hey Tom, I moved to North Carolina in March. Had to sell my house here in Georgia, and it took quite a while. I had to drop my price. I made money, but not as much as I could have. I had to drop the price about $100,000. Well, at least you were able to get out of the deal. I mean, that's a positive. Look, I think we had existing home sales data out yesterday. We had a little bit of a bid in the market, but here's the thing, right? I always say this, like if you can think back to your Finance 101 course in college, you know, the balance sheet is in order of liquidity. I always say asset prices correct in order of liquidity, right? And essentially liquidity is like how fast can I convert it into cash. So for a stock, for example, if I own $10,000 worth of Apple stock, I could literally pull up my phone right now and just liquidate the entire thing in 2 seconds. But real estate, hard assets like real estate, I can't just turn it into cash overnight. I have to put it on the market, I have to market the property, I have to negotiate with a bunch of people, and it could take, you know, days. It could take months, it could take years to sell some properties. The problem now is the market's really not moving. And I kind of deal with this every day in my business because you have buyers right now who want to buy, but they technically can't afford to buy right now. But at the same time, you have sellers that really don't need, they're not motivated, they don't need to sell in most cases because they have either extremely low interest rates on their existing mortgage. I mean, you have some people right now who are sitting on, you know, 2.25%, 2.5%, 30-year fixed it's essentially free money, so it's very manageable, right? So they really don't need to give the house up, right? They'll leave it off the market. They really don't need to negotiate. Or you have a lot of boomers that have like 100% equity in the home. So it's like, I don't need to do a price cut because there's really no motivation. So I think once we see some sort of motivation from the sellers, that's when you'll have these more dramatic price declines. And I think if interest rates kind of come down, that's will kind of lubricate the market a little bit. Hey, I see Carl Roth. What's going on? Always a pleasure. Hope you're doing well. This is the beautiful New York Athletic Club. Jen Claus, what's going on? Hey, Emmett says, what a treat, a Friday afternoon live stream. Were you in Jackson Hole recently? No, but we were kind of talking about the whole Federal Reserve situation today. And it seems as if Fed Chair Jerome Powell is going to be very accommodative. So, hence the massive bid in asset prices. I think the S&P 500, did we hit a new all-time record high today for the S&P? I know we hit a new all-time record high for the Dow, and I think Ethereum hit a new high, and I think Bitcoin was up maybe 4% today, 3 or 4%, something like that. Hey, Michelle Henry. This is how was my day? My day was really good, no complaints. I'm finally able to get off of work early, so I thought I would just pop on and do a quick walk through Midtown Manhattan before I head home. G-Rob93, this is watching from Ireland, love the videos. Good to see everybody from Ireland. There was this spot that I went to the other day. I'm trying to think what it was. It's this famous Irish soda bread place on the Lower East Side. I'm blanking on the name, but it's run by this really nice Irish lady, I think from County Mayo, and they have really, really good Irish soda bread I was checking out. In any event, this is the corner of West 58th Street and 7th. This is one of my favorite buildings in all of New York City. It's Alwyn Court, 180 West 58th Street. Look at that. I like it because the architecture is great and it has an interesting juxtaposition with the new New York, like Billionaires Row, 157, and the old New York, which is Alwyn Court. So much detail on it. Hey, Jamie Vogels, how come you don't do the streams at night anymore? I've been put on a lot of big projects, and it requires me to be very, very attentive to that. But I think my time will free up soon. Well, look at that guy. I was hired to liquidate a significant portfolio of assets in Manhattan. And it's just taking a lot of my time. Hey, Father Josh is here. Says I'll be in New York City in a few weeks at Holy Innocents on West 37th Street. Well, that's fantastic. I think you're going to have a good time. Now listen, in a few weeks, obviously depending on who you talk to, right? The city is going to cool off in a major way. So you're not going to have this, 80 degrees and very, very high humidity. I would say mid-September, October, things get very things calm down in Manhattan, and I think it's like the perfect time to come visit is mid-September. So I think you're gonna have a really good time. Hey, Mr. Bagman, it's good to see you too. But yeah, we'll try to bring the streams back on a more regular schedule in some capacity. But as always, we upload a video every day. Obviously, those videos are a little light on the finance talk, more focused on different neighborhoods in the city, the architecture, real estate. So we'll try to work our way back in some way, shape, or form. But oh, look at this. This is new. I'm actually seeing this for the first time with all of you right here. Guys, this is big. This is really exciting stuff here. Look at this. They have finally taken the scaffolding down from the side of Carnegie Hall. Isn't that amazing? I mean, this thing has been covered with scaffolding since what, 2022, I think? That's really, really good. And it looks good too. Carnegie Hall is one of my favorite buildings in the city. Just so much history, the architecture is beautiful. And it's finally, the scaffolding is finally coming down. It's amazing. That's Carnegie Tower right there. But behind us is the Osborne. This 205 West 57th Street. This building is amazing too. I believe there's a unit 4A in here, which is not really an apartment, it's more like an office. And I actually want to buy it. I think it's on the market for 1.8 million. I wouldn't pay 1.8 for it. I'd pay $1 million for it. But if you go on Street Easy right now, you got to look this up. It's just so stunning in here. So 205 West 57th Street, apartment 4AA. It was converted into essentially what looks like a home library and a home office. And it's very reminiscent, very, very reminiscent of the Morgan Library, if anybody's ever been in the Morgan Library. So it's really quite nice. Check it out. Hey, Michael Wooten is here, says Ethereum is going crazy today. Ethereum is going crazy today. I just think the whole cryptocurrency space in general caught a really big bid today. Ethereum's up what, Michael? 10% on the day? What do we got? I think it's up 10%. Bitcoin, I think, is up maybe 3 or 4%. Yeah, I mean, all risk-on assets today because Fed Chair Jerome Powell is appearing a little bit more dovish than normal. I did a live stream, what was it, about 2 weeks ago, just doing a brief, broad market update. And I really do, I keep the same views. I think we are in the very, very early innings of a new bull market. And I know that's very difficult for a lot of people to believe. But if you do a post-analysis of bull and bear markets, what a lot of people don't remember and don't realize is we are coming off one of the most brutal bear markets since 2008, right? A lot of times the doomers and the fear porn people will say, it's going to be another 2008. You haven't lived through a 2008 style financial crisis. Well, the 2021 through early 2023 bear market, in terms of individual equities, right? Individual stocks, the drawdowns were worse than 2008. And I mean, if you look at the data, if you look at the drawdowns, it was worse. In terms of overall market capitalization wipeout, it was way worse than 08, particularly if you're a growth stock investor, right? All of the special purpose acquisition companies or SPACs Many of them went to zero. Many of them were totally decimated. You know, there was 1,035 initial public offerings in that big blow-off top in 2021. In 2023, there was like 93 new issues. And if you want to look this up, you guys could kind of fact check and go along with me. But I think it's slickcharts.com where you can kind of monitor IPO activity. I think we're going to have another euphoric run. I would say we're probably in maybe inning 3 of this new bull market. And of course, along the way, in bull markets, you have pullbacks and you have corrections. Now, I've said I think Q3 is probably going to be our first pullback of the new bull market. And then Q4, the Santa Claus rally is going to be very, very violent to the upside. The problem is I've kind of been a little bit wrong on that, right? Because yes, we've had, pullbacks in the market. Yesterday was a pretty rough day in the market, but this market catches a bid in one day. The S&P 500, the NASDAQ, will correct to the 50-day moving average. It'll come down to the 21-day, and there's a perpetual bid in the market, and we just shoot right back to all-time record highs, right? That is not something you see in a bear market, okay? That is bull market activity. Oh, this is the Park Central Hotel. So another thing that you see during bull markets is massive participation, okay? And if you go sector by sector, you have very, very high participation in this market. In addition to the fact that interest rates are still historically elevated, right? We haven't had not one interest rate cut. The Fed funds rate is still, with a 5 handle on it. So I think we're just getting started. If you look at a lot of the financial stocks, a lot of the bank stocks, those have pretty much recovered, and a lot of them are leading the market, right? Particularly the boutique banks. So my sort of prediction is that we have a resurgence in new issues, in new IPOs. We already have had quite a few. We've had CoreWeave that has performed very well, and we had Figma, right? And when you have new IPOs, new issues that perform well and start to do well on their first or second day of trading, well, that gets a lot of CEOs and a lot of, C-suite of a lot of companies, they really, really want to start to talk to their bankers, right? If you're a CEO of a company and you see that Figma went up, 50% on its first day of its IPO, well, you're probably going to call your investment banker and say, hey, let's price, my IPO higher, right? Let's push the pricing on this. And that kind of gets the gears turning. So you're not, I think the signs of a market top, right? The signs that the market is going to get a little bit frothy is when you start to see an overwhelming amount of companies coming to the public markets, either via traditional IPO, a direct listing, or a SPAC, right? A special purpose acquisition company. And we're very far away from that. We've only had a handful of companies come public. With this administration, with the Trump administration, the buzzword of the day, I know that everybody was thinking I was going to say artificial intelligence. It's not, it's crypto, right? The Trump administration with Howard Lutnick have been really, really pumping cryptocurrencies. So you're going to see a lot of crypto-centric companies come public. Gemini filed for their IPO. We've had Circle IPO, and I think you're going to have a lot of other companies in and around the cryptocurrency space, coming public. So if the top of 2021 was about 1,035 IPOs, and we're at what, maybe 100? Well, you got a long ways to go until you have some euphoria there. Anyway, let me check on the chat here. Hey, Stephen Edwards, what's going on? Thanks for joining us. Hey, I see buy the book. What's going on? Who Dat Dave's, the S&P 500 operating earnings is at a 24 times multiple, correction overdue. Well, look, I mean, Dave, here's the thing, right? Valuation metrics, in my opinion, need to be adjusted for the times we live in, right? And I took a lot of heat, you know, with the tariff crash when, you know, stocks were down, you know, 25+% in a matter of 2 weeks. Everyone's like, no, we have to retest the bottom. We have to wait in order to buy back our stocks. And I'm like, guys, we had a follow-through day. You got to get long here. And there's a lot of people, right, that I know who run big money on Wall Street that have completely missed this rally. So this has kind of flipped this script where you now have almost a perpetual bid here. Now, of course, you're going to have corrections in a bull market. Of course, the S&P is going to come down to the 50-day, which it already has. But there's a lot of people that are severely underexposed stocks, a ton. And if you're a money manager, you get paid to manage money. I mean, that means put it to work. So I think this is the very, very early innings of the bull. And what adds a lot of fuel to that bull market is a lot of people underexposed to a market that's climbing a wall of worry. When we have an AI boom, when we have a data center infrastructure boom, when we have a semiconductor boom, right? So, my view has been you got to lean bullish until proven otherwise. And you got to follow the rules. And, you know, I think people who have had equity exposure are feeling rather well now. Diane, good to see you. Thanks so much for joining us. Michael Wooten says Circle IPO is a rocket ship. Yeah, and like to your point, the other side to that would be, oh, these companies are BS. I don't believe in cryptocurrencies. I don't believe in what is it called? Stable coins. I think it's all nonsense. This is all pie in the sky stuff. That actually doesn't matter, by the way. It's okay to think that. You could think cryptocurrencies are stupid. You could think stable coins are stupid. You could think Bitcoin's a scam. You could think Ethereum is a scam. That's fine. But what gets people messed up and kind of fumbling the bag of this great bull market is they confuse two things, right? You have got to separate these two ideas. It's okay to hold that thesis, but simultaneously saying, wow, new IPOs that are just coming to the market are performing really well. What does that mean? If IPOs are coming public and these things are tanking on opening day and not performing well, what do you think that's going to mean for future deal flow, right? Companies are going to hold off on going public. But when they see all of this bonanza that's going on, right? Wow, you know, Figma's IPO was seemingly underpriced. You know, Circle took off on its first day, right? That starts to get the conversation churning on the street to say, let's start to have a conversation to price my company to go public, right? And that sentiment is what drives the market. And it kind of trickles down, right? Because how do big investment bankers get paid? Depending on which, you know, department in the investment bank you work for, right? You get paid on advisory. You get paid on deal flow. And if there's a ton of deal flow, if there's a big IPO boom on Wall Street, well, what does that mean? That means Goldman Sachs and all the big investment banks like Morgan Stanley, Bank of America, their earnings are going to, you know, skyrocket, right? So the more deals that happen, what's going on here? Anyway, the more deals that happen, the more revenue and the more profits these big bankers make, and then their stocks go up, right? Guys, this is Gallagher's Steakhouse here to the left. Now, we talked about kind of the bull case. Here is my one kind of area where I am a little bit concerned about, and I do want to make a prediction of what I think when the market does top, and I'm talking about putting the top where like the S&P will go down, 40 or 50%. I think we're years away from that. I think it's going to be a lot of these treasury companies, these crypto treasury companies that are trying to play a copycat to like MicroStrategy and the like. I think that kind of area should probably be avoided by investors. I mean, there's really no reason. I mean, if you want to get exposure to Bitcoin, just go buy some Bitcoin. If you want to get exposure to Ethereum, just go buy some Ethereum. I don't think there's any reason to get involved in any of these treasury companies. Hey, TC is here, so glad to see you live streaming again. Well, I appreciate you joining us as we admire these steaks from afar here at Gallagher's. I see George here, what's going on? Willie, Dave Ram, cheers. RJ, what's going on? Peter says, I think next year will be a stellar year in the market. A lot of investment from foreign sources. Will be entering the market, and tariff revenue will reduce the deficit. Just trying to catch up on some of the Junior says, hey Tom, what's your favorite source to research reputable financial news or trends? I mean, I like Investors Business Daily. I've always subscribed to them. IBD is great. Also Twitter, I mean, if you have a Twitter account. Hey, Bree Grams, what's going on? Cheers. Proud American, what's going on? What is going on? D says, what app do you recommend for buying shares? I mean, really any broker is fine, but I don't really recommend. I know we do have a lot of new people here. I don't recommend, I guess don't come here for stock picks. I don't give out stock picks. We just talk broadly about the market. And I'll tell you why I don't give out stock picks. Because it's actually useless to the end user, right? Because many people will see that, oh, Berkshire Hathaway just bought this stock, right? I think the newest one was United Healthcare. They'll be like, wow, Berkshire just bought United Healthcare. I'm gonna go buy it, right? Or Stan Druckenmiller just bought this stock, so I'm gonna go buy it too. The problem with that is you have no idea why they're buying it, right? You haven't done any of the work, you haven't done any of the research, you don't know how to manage the position, you don't know in what size they purchased it, you don't know where their exit is, right? So if you work at one of these big financial firms, you model the company, right? You probably run some sort of a discounted cash flow analysis on the company to say, hey, this is where we think the valuation is. And once it hits that valuation, we'll probably liquidate our position. So if you're just listening to people that give out stock picks and tips and things like that, you're not gonna know when to sell it. You're not gonna know why you own it. You're not gonna know the story. You're not gonna know if a fundamental value changes. You don't really know anything about it, right? So it's better off not even buying it or not even really paying attention to it. And I know that's kind of an unpopular thing to say, but it's true. I mean, so those are kind of my thoughts on picks and things like that. Guys, this is the Ed Sullivan Theater, the Late Show with Stephen Colbert. That this was a beacon of controversy over the past couple weeks too, right? A lot of people think that the cancellation was politically motivated. Now, I actually like Stephen Colbert. A lot of people don't like him because of his politics. I have completely different politics than Stephen Colbert, but I think he's a funny guy. I like Stephen Colbert. But I don't think that the reason why the show got canceled is for political reasons. Those shows really don't make any money anymore. And to kind of tie this back into a financial conversation, There was a really good article in Investors Business Daily last weekend now. It's crazy that it's already Friday. Talking about new media. Let me see if I have it. Hold on. Wow, I do have it. So this is the cover story. If anybody's interested, you should read it. It says YouTube is in control. Its megastar content creators are taking over TV screens. The stakes are high for parent Alphabet, or Google parent Alphabet, right? But the article is not just about YouTube. The article is about the distribution mediums where people consume content, and it talks about gross margins in the industry, and it's so interesting because you could have a very, very successful show, right, with viewership in the tens of millions, 20s of millions of dollars, but your CapEx spending for that show is $100 a month, literally. Right? And that has completely changed the game of media. Gone are the days where you need to pay some big TV host $20 million and have a staff of 100 people to put on a TV production. Because if you think about follow the money in advertising, advertisers really don't give a shit about that. They just care about how many eyeballs are going to see their product. So if you have all these kids and all these new wave of media, right, whether we like it or not, this isn't an opinionated thing, I'm just talking about the data. If you can have a kid in his mom's basement, make some videos, right, shoot some TikToks or make his own broadcast that reaches 100,000 people, what is his overhead cost? He doesn't have any employees. There's no startup cost. And you could reach 100,000 people for a fraction of the cost, and you don't have any production cost, and advertisers will be more than happy to give you money. So that's really put pressure on a lot of the late night industry and just legacy TV in general. And that's why the streaming platforms and the streaming providers are taking over. Another interesting statistic that I've actually been watching very, very closely, which I think a lot of people should be paying very close attention to, is the mediums in which people consume content. So in 2018, there was a massive shift, particularly on YouTube. In 2018, the vast majority of people consumed YouTube content on a cell phone, right? A mobile device, an iPad, an iPhone, and an iPod, if you will. But the massive shift happened in 2020, right? I think we could assume the pandemic helped that, where most people now are consuming YouTube-style content on their TVs. Now that is so important. Now, why do you think that is so critical of a data point? Well, because watch times tend to go up significantly if you're consuming content on a television, because you're in the living room, you're sitting down, you're enjoying a show after work, or you're more likely to consume content longer on a TV just because of the setting where it's in. So advertisers know that. So if you're consuming content on YouTube longer on a TV, you're a more astute and attentive audience, in which case YouTube can charge advertisers a premium to advertise on the platform. But if you're, a late night show, you just kind of leave it on in the background. You're not really paying attention to it. It's a 20-minute show. You could just advertise on a platform like YouTube or Netflix, right? So I think that's extremely, extremely important piece of data from an investment standpoint to say, essentially, short legacy media, go long new media. And that has been the trade over the last 5 years, right? Netflix literally trading at new all-time record highs, Alphabet, Google. I think we hit a new all-time record high on Alphabet today. So I'm very bullish the streaming platforms, and I'm very, very underweight or bearish legacy media. Let's just say that. Anyway, this is Billionaires Row. We're looking at Central Park Tower here. That's 217 West 57th Street. That's Gary Burnett's big X-Tail building. Hey, Jimmy Boyles' 85-inch TV on YouTube. Wow, very cool. You know, that's also going to be very good for the consumer too. What do you guys think? Because if more people now are watching content on YouTube on an 85-inch, 4K TV, well, that means the content creators need to then cater their content for ultra high quality to look good on those type of devices. Again, just technology tends to just be overall good for the consumer all around. Hey, Jamie Pope, thank you so much for your very kind $25 donation. It says, hey Tom, beautiful afternoon. Keep up the energy. Appreciate it. Thank you so much. Jamie, I'm sure you were keyed in to Jackson Hole this week. Fed Chair Jerome Powell looked exhausted, but it seems like he's going to be a little bit more accommodative this time around. I'm not sure if he's just caved in or maybe something has really changed, but the market really took off today. Now, somebody picked up the phone and called me right around 11 a.m. as I was walking back to my office, and it was a really good friend of mine. He's kind of acted as a mentor to me, hedge fund manager out of Chicago, and he was kind of talking about the market's reaction here. And I've always kind of mentioned this, by the way. One of the most pivotal moments in terms of a very, very harsh flush to the downside in the market, which was the Christmas Eve of 2018. And I remember trading on that day. I was on the Long Island Railroad, obviously shortened trading day, and the market, it was just getting freaking crushed on Christmas Eve. But Steve Mnuchin, a lot of you guys are probably smiling right now. Steve Mnuchin, that's a big throwback, right? Comes out and starts to make that pivot, kind of like what Fed Chair Jerome Powell is pivoting right now. And Christmas Eve marked the dead low for the S&P 500. It was a waterfall style sell-off into Christmas Eve. That was probably the market sell-off where I was getting a little bit frazzled, and I'm just like, you need to just kind of close your eyes and buy. That was a scary time. That was almost a scarier sell-off than the COVID pandemic, if you can believe it or not. But if you do kind of a comparative analysis of those two events, and maybe some of you will have time to do that this weekend, go into some historical archives on CNBC right around December 24th, 2018, with all of the articles about Steve Mnuchin. I really want to kind of go off on a tangent and kind of explain a little bit more, but we don't have much time. But in summary, I think what you saw today, the massive rally off the bottom today, assuming it holds and we get some follow through on Monday and Tuesday, this could potentially be the start of yet another massive leg up in this bull market. That's very possible. Because we've managed, guys, think about the wall of worry that this market has managed to climb, right? In April, everybody thought the world was going to end because of the tariffs, right? If you're following me on X, you can follow @WalksWallStreet on X. Literally almost the day the market bottomed, what's that guy's name? Dan Ives? Yeah, I think it was Dan Ives went on CNN's primetime with that other guy, the Einstein of Wall Street. What's his name? He's one of the most famous brokers on the floor of the New York Stock Exchange. But anyway, those two guys go on CNN primetime, and my friend sends me the link, and it is the most cartoonish, ridiculous thing ever. They're saying, from the people that we're talking to, there's going to be no food on the shelves at Walmart starting next week. All of the shipping containers are turning around. They're going back to China. There's going to be no food on the shelves. And the lady, I don't even know her name. I don't really watch CNN. But she's taking out a whiteboard, okay, right next to that Peter Tolchman and Dan Ives. And they're drawing pictures of Chinese cargo ships on a whiteboard and saying that we're gonna have no food to eat. And I retweeted that. I'm like, this is the bottom. I'm like, this has to be the bottom. And granted, 2 days later, we had a follow-through day and we got long a ton of stock. But guys, like, that's the stuff you see at the bottom. And that's the stuff that's like ridiculous. And the fear mongering at the bottom. You know, Bill Ackman did the same thing, this sell-off, when he, you know, made this claim that Commerce Secretary Lutnick, he's purposely crashing the economy because Cantor Fitzgerald has, you know, a short bond position on. So he took the position as Commerce Secretary to crash the market on purpose so Cantor Fitzgerald can make some money on a stock trade. Like, that's fucking ridiculous. And I mean, I'm not, you know, a billionaire, and I'm smart enough to know that that's absolutely ridiculous, right? But that's kind of the sentiment you see at the bottom, right? That's kind of the sentiment you see at the bottom. You know, mass starvation, the tariffs are going to crash the economy, there's going to be no food on the shelves. When, guys, that's obvious, okay? You don't have to agree or disagree with the tariffs, but it's obvious you're not going to have a mass famine event over tariffs. Okay, come on. But that's kind of the stuff you see at the bottom. I don't really know where I was going with that, but I guess in the reverse, once you start to see a lot of pundits coming on CNBC, you know, in the New York Times and the Wall Street Journal with very euphoric statements, that's when kind of, you know, that to take some chips off the table. But I guess what I'm trying to say is the market has managed to climb all of that wall of worry. If you turn on Fox News, if you turn on CNN, they're still talking about how the tariffs may crash the economy, not now, but later, right? It's gonna happen, it's gonna crash. The housing market is gonna crash. There's so much fear and pandemonium out there still, as this market climbs the wall of worry, while we're in a relatively high interest rate environment. So think about what the market's going to be like once we have a pivot in monetary policy and we have accommodative interest rates. The Fed starts to print money again. I mean, this market could go substantially higher. I guess that's kind of what I'm equating to, kind of what I'm thinking about. Anyway, guys, this is the beautiful limestone Jesus building. This is 15 Central Park West. This was developed by the Zeckendorf developers, and this is a Robert A.M. Stern beauty here. This is one of my favorite buildings in all of New York City. The former CEO of Goldman Sachs, Lloyd Blankfein, has a really, really nice unit right here at 15 Central Park West. Very beautiful. Similar at 220 Central Park South, you have this limestone facade, Robert A.M. Stern architecture as well. All good stuff. Anyway, Noodles, good to see you. Since I missed your live streams and stock info, I missed you guys as well. Alan, what's going on? Hopefully you're having a good start to the weekend. Happy Friday. Double O is here. Sue Rollins, thank you for joining. Appreciate you. Who Dat Daves is who watches Fox News or CNN anymore. Unfortunately, and not to sound like I'm being a little bit disrespectful, but unfortunately old people tend to watch Fox News and CNN now, and it scares them, and I actually think it's not a nice thing to do. You know, because I usually hang out with, you know, people my age and a little bit slightly older, but every time I hang out with like much older people, it's a completely different conversation. And I'm not sure if anybody else, maybe people in the audience, can agree or disagree. I actually want to know your thoughts. But I was thinking about this the other day, and when I talk to kids my age, right, people my age, 20s, 30s, they seem to be very optimistic. Maybe that's just because that's the people I hang out with. But they're optimistic about AI, they're talking about their jobs. But when I talk to much older people, right, much older people, talk about like, maybe 70s or 80s, I mean, they're like petrified. It's like you would think they're living in a completely different world. And I think we could draw a correlation to, because they're watching the news all day. They're watching the media all day. And the media's job is to just scare the shit out of you all day. I mean, if you turn on CNN or you turn on Fox News, I mean, some of the stuff that they say is just, I mean, it's almost like you're watching a cartoon. And I'm not trying to be like kind of coy or about that. It's crazy. I think the media is really doing a disservice, and they're scaring a lot of people. It's actually not a nice thing to do. I think they're not nice. Anyway. I mean, obviously there's some good stuff on Fox News, there's some good stuff on CNN, but the overwhelming message is just fear, right? Somebody sent me a funny clip from this show, The Five, or maybe it wasn't The Five. What is that show that's like very popular on Fox? Which is kind of funny sometimes. I'm not gonna lie. Gutfeld it was, and they were obviously doing a hit piece on New York City like they always do, right? Because and there is problems with New York City. I'm not like absolving that. Like, we do have our struggles here in New York, but the media exacerbates that in a major way. And I think it was something about the subway and Gutfeld and all the people there, like, we would never be caught dead in New York City. Nobody takes the subway anymore. It's always empty. Everybody's leaving New York City. And I kind of have to laugh because I'm like, dude, you're broadcasting from fucking 6th Avenue right now. Like, they're literally filming the show from 6th Avenue. And they're like, everybody's leaving New York. This is why people are leaving. This is why we're leaving. I'm like, dude, you're broadcasting live right now from Avenue of the Americas in the Diamond District. So it's like, those people are there, living in New York. The Fox News headquarters is in New York City. But, they have to drive and ratchet up the fear narrative to rally the base, which I totally get. But then you'll turn on CNN and it'll be like, oh my gosh, it's martial law in DC. We're just arresting American citizens and deporting them. Your mom's going to be deported. Don't go outside because we're going to deport you. It's like the world is falling. It's like really, really sick stuff. Really, really sick stuff. In any event. Hey, the Mighty Bull. Thanks for joining us. Hopefully you're well. Perhaps a good rule of thumb is to say, if you read something in the media, take about a 30% haircut from that, and that's probably the truth, right? Like, I know the game. You have to kind of do hyperbolic stuff to drive clicks. So if you read something that's negative in the media, subtract about 30% from that, and that's probably the truth. Or sometimes, subtract about 50% from that, and then that'll be the truth. Man, what a nice day it is today. We're getting a new Wegmans on the Upper West Side, which I'm very excited about. In my opinion, Wegmans is the best grocery store in America. I think it's better than Whole Foods. Maybe a little better than Whole Foods, but in any event, there's going to be a new Wegmans location right here. And I think it's going to do really, really well. Hey, what's up, Cosmo? Good to see you. Oh, Cosmo, I was meaning to send you a DM. Did you try Luckin Coffee yet? I don't remember. I think I sent you a text or a DM. You got to try it. You got to try this new coffee shop in New York City called Luckin Coffee. Okay, I'll tell you guys a quick story about Luckin Coffee, and then we got to boogie on out of here. So, and I may have told this story before, but this was a long time ago. There's this Chinese coffee company that's a very good company, by the way, that was publicly traded on the NASDAQ under the ticker symbol LK. And Luckin Coffee is a Starbucks competitor. The problem is the stock was performing really, really well. I think this was like 2018. I used to own that stock, by the way, before it got delisted. It turns out they were caught cooking the books. I think it was about a $350 million accounting fraud scheme that Luckin Coffee got caught up in, which is crazy because they don't even need to do that. I mean, it's a really good business. You don't need to lie about your revenue. In any event, they got delisted. The stock goes to zero. You could still trade the stock and you could still buy the stock, but it trades over the counter. It's like an OTC stock now. But they opened up their first location in the United States, in New York City. And it's unbelievable. So if you got, I'm not sure, maybe we do have some people who have lived in China, or maybe some of you are Chinese or who are familiar with Chinese companies and the marketing tactics. It's very, very effective. So if you download the Luckin Coffee app, everything appears to be the same price as a Starbucks, as a Brothers Coffee, you know, all the major coffee houses in America, if you look at their prices. Now, here's the thing. They'll text you every day with a 50% off coupon, right? So let's say if, you know, a latte or whatever, $7, they'll give you a 50% off coupon to significantly reduce the price. But the coupon expires in 7 days. So long as you get coffee there once a week, you'll never pay full price. You can get coffees for like $2. So that's kind of, and that's like a that's very common for Chinese companies to do that. If like you're familiar with Temu, that kind of advertising, or that e-commerce platform in China, I think they've been sued over those kind of advertising practices and those marketing schemes, but it's very, very effective. And if Luckin Coffee is allowed to expand throughout the United States, I think that could be a pretty big death wish to Starbucks. I think it's going to take significant market share because you've essentially gamified your coffee purchases, and it has a wonderful user interface, and it is a very, very high-tech store. There's no cashier, there's no cash register, there's no cash, there's no ordering, right? You order everything on the app, and you go in and you just pick it up and you scan your QR code. Once you scan the QR code, it unlocks your drink and you can take your drink. It is very, very cool. And a lot of those Chinese companies, a lot of Asian companies, like I've traveled all throughout Korea, are very, very high tech, and they're very good at gamifying the sales cycle. So I wouldn't be surprised if Amazon starts to adopt that kind of thinking, like sending you a text for daily deals on Amazon. I believe you're going to see significant Chinese influence for kind of gamifying the sales cycle, if you will. Hey, Cruz is here. JJ, what's up? Hey, Rick Roll, thank you so much for joining us. I appreciate it. Patrice 2020. Jimmy Boyles, thanks for joining. Hey Chris, what's going on? This is Wow Tom. I've missed your positive financial talks and wonderful walks. I've missed him too. So I think this is what we're gonna do, everybody. I wanna wish you all a wonderful weekend. I really, really do. Enjoy it, because yesterday, for all those New Yorkers in the chat, I woke up and it was, it was one of those first days in the summer where you wake up and you're like, oh no, I kind of feel that fall nip in the air. And then you're like really, really dreading the start of the fall and the start of winter. So it's coming, right? I mean, it's almost the end of August, so it's gonna be a wonderful weekend in New York. Make sure you get out and enjoy it. We're gonna start to do these live streams more often. However, there's going to be some changes because of work. I've been put on some significant projects, which requires like all of my time. We will still post daily videos every single day at 8:30 p.m. with more of a focus on individual neighborhoods, individual buildings, new development, architecture, things like that. And I'll try my best to go live 3 days a week. But if you really are here for the market commentary and the conversation back and forth, we always share ideas on the markets. The best place to do that is to follow us on X. You can follow @WalksWallStreet on X. But starting Monday, I will be spinning up a separate channel focused on financial market commentary only, so I can get a direct message out to everybody who's interested immediately, and it'll probably be around 15-minute to 20-minute videos, probably every other day. But we will also try to bring the live streams back 3 days a week, maybe for about an hour around this time. I'd say around maybe starting at 5:30, ending at maybe 6:30 or 7. But yeah, I mean, I hope everybody's been well. I tried to put out as much content as possible. It's just, I was doing a lot of international travel. I was in Korea. I have to go back to Korea, and I'm gonna go to Chile. I'm gonna be in Argentina. So it's gonna be a busy Q4. In any event, thank you all for joining. Have a wonderful weekend. Be safe and enjoy it, because these are some of the last weekends of the summer. So I, Padilla, appreciate it. Solo 401, thank you for joining. Cosmo, thank you so much. Alan, Willie, Teresa Diaz, TD, Patrice 2020, thank you so much. My friend Gigi NYC, Hal T16, thank you. TC, Jack Jackson, have a wonderful weekend. See you guys soon.